Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is June 20th edition of Market Outlook. So, with the markets waiting around for what happens in Britain regarding the EU and the mandate to stay in, markets remain volatile. Couple things that are important to note. Clear deterioration. Look at this. Minus 4 days, 4 distribution days in the S&P 500. That means institutions are selling stocks here. We've had 4 distribution days in the last 2 weeks. That has definitely flipped around. And you can see across the board, we've only had 2 accumulation days in most of the indices against 3 and 4. At the 4 to 5 threshold, you assume that there's some serious distribution and that a sell-off can ensue. Meanwhile, markets are up marginally for the year. A lot of the big NASDAQ stocks getting hit, and NASDAQ 100 down 4.8%. So overall, markets weakened a bit here, with volume definitely giving you an important indication. So let's take a look at the next page here. What is happening in sectors? Because that really gives you a very good indication. Well, first of all, let's highlight here the fact that utilities, right, conservative play, consumer staples, stuff that people need, toilet paper, toothpaste, right, they're going to buy it no matter what. Outperforming sector. Real estate, which is the IYR is more of a dividend type play, taking the top 3 slots. Energy picking up the rear along with materials, right? So in that is precious metals and metals in general. So you've got here a situation where, another thing to note, we went into a warning phase. That means that we closed under the 50-day moving average. We also have a very interesting setup where we have got an inside day formed just after we've broken down into a warning phase. So again, a breakout above the inside day to the upside would tell you that this down move here might be finished. And on the other hand, breakout beneath the 2-day lows Thursday and Friday would definitely put additional pressure. You could see a potential test, certainly, of the 200-day moving average. Okay, let's also take a look at the number of sectors up versus the number of sectors down, and you can see it's evenly split. So market is still overall right above the 200. The sector reading is you have equal number of sectors up versus down. To me, that's sort of a slightly positive to neutral. Again, overall, the focus here is on the more conservative plays, trying to get some sort of yield. So people are definitely on the sidelines. That's consistent with high cash levels, which is unusual because they haven't moved a bit since the market's been moved up from February over 15%. If anything, cash levels are at higher levels than they were, even lower, just indicating nervousness in the market. And that's actually a positive overall, generally speaking. All right, let's move on to some hot areas in the market, just an overview of all different types of asset classes. So, first thing to re-emphasize, you can see 6-month leaders in this section here: gold miners, metal and metal mining, silver, and sugar. So, again, what's happening is move into commodities. Furthermore, you can see a couple things have occurred. NASDAQ moved into distribution phase, right? QQQs. And a couple of other things to note, that healthcare moved down into a warning phase. So definitely some erosion. This this week and on Friday, again, focus oil, oil services, corn, oil and gas were very hot on Friday. And again, the overall backdrop is commodities as an emphasis. And again, a weakening overall of the key stock market indices. Okay, let's head on over to our next table, which is market internals. Let's see what that's telling us, because that's slightly that's indicating possibly a oversold condition is developing. Maybe there's a couple days left. Maybe you get the flush after the vote on the exit. But overall, let's see what the market's telling us here. This is the S&P. You can see with this sell-off here, right, up-down volume, got really hit hard. Now remember, we went through the overall volume. You got some distribution days on this sell-off, but you're actually at a point in starting to bounce that is indicating market could be a bit overdone here on the up-down volume indicator. And this is a shorter term time frame. This looks out over the next 5 days or so to a week. And again, here you have a scenario where the market hit oversold readings, bounced up. Now, our McClellan oscillator, which is over here in the middle, you can see also got to slightly oversold levels. You can see you can get a lot more, right? And sometimes it hooks up before the final flush. So right now you can say the McClellan oscillator, which looks out about a month or so, and is good for sometimes several months or at least 30 days worth of predictive action, hitting oversold levels as well. What is not confirming and just beginning to get oversold is the advanced declines. So breadth got overbought, rolled over, right? Gave you a pretty good warning, and we're still selling off. What I like to see is all of these hit oversold levels, start bouncing up and crossing back over their midpoints here, but that has not occurred. Overall, though, you can say it looks like we're potentially setting up and we're close to a very oversold reading. So let's watch this. This is marginally more positive than negative as the market has sold off here. And that's on the S&P. Let's take a look at the story on NASDAQ. Similar story. But of course, NASDAQ has its own unique way of handling things. So this is the NASDAQ composite. This is all of the indices. All of the stocks. It's like thousands of stocks in the NASDAQ composite. So you can see we hit overbought levels here and then subsequently sold off. Didn't really get oversold, and you can see we're sitting right here under the 200-day moving average, and that is a distribution phase. So this is much worse than where the S&P is sitting. In addition, we haven't really hit massively oversold levels across the board, just stopping shy of it. So it could be that you've got some more downside before you hit absolutely oversold levels down here and all the way down here. So we've got some more weakness potentially brewing here on the NASDAQ. Okay. And again, not quite as oversold and set up for the bounce as the S&P. Let's go to our next chart. This is the S&P 500. This is the new high, new low ratio. And again, you can see some interesting things developing here as well. Net, this particular indicator is still extremely positive, right? We're still above the extreme overbought readings, which is positive. Now, we did have a little bit of a hook down, but I really want to see it come through this level. We have to get that confirmation. But overall, new highs, new lows in S&P is supportive of prices, not quite as negative as you're going to see in the NASDAQ. Okay, let's go to the next chart here. So what's happened here, the NASDAQ 100, looking at new highs, new lows, and this is a pretty interesting indicator. You can see, we got pretty oversold down here as we came up above this 30%, and when you're really oversold 20% level, it gave us a really good buy signal. We started getting a bit overbought and then rolling over right at the 70% level, and you had a pretty decent sell-off. We started to hook around, got above our midpoint here. Now we got overbought, rolled over, and again, this is what I would consider in sell mode for the OEX, or excuse me, the QQQs. So Qs definitely weaker across the board. Already breaking down beneath the 200-day moving average, puts us in a distribution phase. And of course, this new high, new low, rolling over, and on the advanced declines and up-down volume, more possible downside movement. So that wraps up the looking at some of the market internals. Let's move to some sentiment indicators. So here we have the S&P 500 chart, and look what's happened here. As we've broken down, we move quite a bit up in our sentiment indicators, which is the VIX, right? That's looking at option volatility. And you can see we basically traded for a long time in the middle of the channel. Over this drop here, we got a pretty sharp move, broke out to the outside of the upper Bollinger Band. And when you come back in, that is generally telling you that the market potentially has been a bit frothy on the downside. When you break out through the upper Bollinger, come back in, it's possibly indicating an overly bearish scenario at the moment. So this is a bit more supportive on that particular indicator, which is, again, a pretty good sentiment indicator. Now, we are trading above the 200-day moving average and above the 50, but it got pretty excessive. So for this particular indicator, I would say I'm a bit more favorable. It's a bit more positive for the market that potentially you got really overdone on negative sentiment, and the market is ripe for a rebound. But again, a lot of times it might get another test. So you could have another a day or two of flush and then back down into its normal trading bands. So that's how volatility sentiment is playing out. Now we have another chart similar to this, but this looks at long-term versus shorter-term volatility. And you can see right here, this is VIX versus VXV. So that's 1 month versus 3 month. And again, when you're up over here in this upper region, that is generally positive until it starts rolling over. So we've been in a downtrend. We hooked up a little bit on Friday, but overall This is not supportive to the market. You can certainly see where down here are oversold levels, or what I would consider really extreme pessimism. So you've got a little bit more potentially, or substantially more on the downside here. I would say that this indicator, even with this hookup, the overall trend is down, especially if you smooth it out with the moving averages of this ratio. So I think you got some more here potential. That's what that's showing. So net, what do you have? You've got deteriorating markets. You got some showing of some of the indicators that are showing extreme pessimism. So that is supportive to maybe a little bit more weakness potential before a significant bounce. And certainly NASDAQ is in a much weaker position, and the Q's certainly under pressure with that new high, new low ratio failing, and other market internals not nearly as oversold. So look for the bounce to start materializing somewhere in the SPYs first. And if the NASDAQ continues its route, look for these indicators to get to extreme levels, which we have highlighted here. All right, I think that wraps it up for now. Obviously, one final thing, precious metals, again, commodities, as we pointed out in the sector chart, this is where the money's flowing, and clearly the ability for the central banks to raise rates as the global economy slows or contracts, depending where you are, is definitely putting upward pressure on commodity prices. Thanks. See you next week, and bye for now.